Welcome to Technical Market Insights, ladies and gentlemen. My name is Anthony. I'm going to be your host. Glad to have you. Today, we're going to look at the biggest winners, biggest losers in the market, and hopefully, we can learn something from them. Like, would our strategy have you in them? Are you in them? And what made you get in them? Did you make money? Did you lose money? What happened? So, it's always good. So, for 23 years plus, I've been studying charts. Right? I've been fascinated with the market, the ability to make money and lose money so quickly. And for about 15 years, I spun my wheels, making a ton of money, losing a ton of money. And for probably the last 6, it's been a solid strategy put together. And come January, so it's going to be a new year in 2024. And my son's also turning 18, so he's going to follow this channel, open his first brokerage, and we are going to fund a brokerage as well on this channel, 100% transparent, with about 2K. We're going to put about 10% of our income. Actually, I'm thinking about 20% of my income in every month. And we are going to watch this portfolio grow. We're going to compound profits, avoid losses, and just see the most simplest strategy to build wealth. Keep in mind, your income is your tool. Okay? So there's no gimmicks, no bull crap. I'm going to have my own son doing what I do. I've been teaching him since he was little. So if you haven't subscribed, you should probably subscribe just for the educational value, and probably turn on your notifications just so you know when I post something, because once we start this account's going to be strictly for educational, but I'm going to be posting. If I buy something during the day and I'm at work, I'm probably just going to shoot a quick short out saying what I bought, why I bought it, and then address the details later that day. But anyway, enough with that. Let's get into why we're doing today's video. Biggest losers, biggest gainers in the market. And this is the US common stocks, 6,300 of them. Now, we only touched the high cap 1000, which is the highest market cap stocks, top 1000. All right, I only trade that or ETFs, and I trade the leverage version of the ETFs if there is one. And the account we will start in January will be like a hybrid. Usually I keep a long-term investing account, and then I keep a trading account. So the market did do quite well today. I'll take that back. It didn't do quite well, but it did better than I expected. I expected a pullback really when it got overbought. But hey, it kept running, which is good. I hope everybody makes money. But my strategy is I buy when it's oversold, sell when it's overbought, rinse and repeat. I don't look back. I'm not suffering from the fear of missing out up here when it's at all-time highs, because I got one account that's going to profit and one account sitting in cash waiting for it to pull back again. But anyway, back to what we're shooting the video for. Our biggest winner today is CYTO. Unless you guys can find some pink sheets out there, which are probably not showing up in this, that are more than that. Little baby penny stocks with very low volume. And here, this is a penny stock. But what we got here is the biggest gainer has been the biggest loser, which you will see time and time and time again. All right. I used to come home every day from work, analyze stock charts from A to Z with technical indicators from A to Z, and just study the charts to see what am I in? Would I be in that loser? Would I be in that winner? What happened in the chart? And I've been doing that for a very long time, to where it's just I've developed simple rules and strategies to keep me from taking losses and to keep me from stacking profits. So right here, for one, it crossed under the 200-day moving average at $60. Oh, wow, $60. And it's now, so up at the top left, it's showing in 2 years, basically it's down 100%, 98%. I mean, what a loss. So If you're new to the channel, anything under the 200-day moving average, we do not touch. If it crosses under the 200-day moving average, we sell. But yes, this stock, what a rip today. I mean, 180%. You probably got some people excited, especially if you bought yesterday. But look, whoever bought at 48 cents, I mean, if this keeps the trend it's doing, I think it'd be back down to 10 cents. Please be aware of these pump and dumps. And I'm gonna add a few things here just because I've seen some videos. We got a ton of volume here. What happened news-wise? Let's go back. So yeah, that's more volume than the stocks shows in history. But here, I don't trade on volume because I've seen these volumes hit. Look, big volume there too. And then look, a drop. Yeah, that's more than there, but whoop-de-doo. Let's check the news. The stock was $60 not too long ago. It's probably going to go bankrupt. Why anybody's buying it, I don't know. Let's see what happened today. All right. To sell 51% of its Ventrio maker for $2.3 million. Okay, so this is a company that is selling some assets basically for $2.3 million. $2.3 million is nothing. I'm not sure the market cap on this company. Maybe it's a lot for this company, but they're selling off assets because they are broke. All right, that asset probably hasn't been doing them well. Anyway, for 28 cents, I'm sorry, I don't dabble in penny stocks. Don't get me wrong, I started off trading biotech companies prior to FDA approvals, trying to catch the run up. So been there, done that. I've also traded news, I've traded pump and dumps, I've paid for stock alerts, you name it, did it. But today, I would not touch this stock with a 10-foot pole. You can hope it rallies up and you make some money, but the odds are you're probably going to lose money in this stock, like a lot of people have. I mean, a ton of people. Oh my goodness. Look at how, I mean, this stock was, wow, $2,000 at one point. I mean, this stock is a turd. Stay away from turds like this. If you want to be a winner, deal with winners. If you want to be a loser, you deal with losers. You will eventually become like the stocks you trade. Don't take that personally, y'all. I'm trying to do these videos to keep you guys from losing money, and I just bounced on that one because the volume is probably stupid low, because look at the chart, it looks stupid. Let's see, where was that one at? The volume 663,000 may seem high, but you're dealing with a 4-cent stock. The money coming in that is like zero. And ladies and gentlemen, I don't pay attention to volume. I don't pay attention to VWAP and all this other bull crap. I've studied every technical chart. I could say technical chart, technical indicator on every chart from A to Z. And what you see is what you got. That's all I need to make trading decisions, okay? This hasn't even developed the 200-day moving average. We're moving on this one because this has got a chart that looks normal. I mean, it looks like crap, but it looks, it's got normal bars on it, not big gaps all over the place. But probably really low average volume itself. It's got 38 million here, but it's only worth 79 cents. I'm not going to keep volume on my screen because I never do. But I mean, look at this. There's people that paid $4 for this. And yeah, your reason for entering it maybe it's going back up to $4. Ladies and gentlemen, been there, done that. The same people who bought here were probably thinking that. Same people who bought here were probably thinking that. Same people who bought here were probably thinking that. And look where it's trending. Do your DD on everything you buy. And you almost got to think, like if somebody walked up to you on the streets and asked you to invest in their company, and then they show you this piece of crap company that's losing money, very speculative, you might not get your money back. Would you give them money to invest in that company? I mean, that's the kind of question you need to ask when you get in these things. I won't even trade a company, won't even swing trade it if I don't think it's something I'd be willing to hold for 10 years. All right, so yeah, none of those we'd be in. We wouldn't be in this. It's got a 200-day moving average. But oh my goodness, what is like no volume for 200 days, and then whatever this is, I'm sorry. So maybe there's other reasons you're entering this, but as far as stock charts go, no. And that's the only reason I look for bullish companies, meaning bullish stock charts. And then I research the company to make sure they got a good PE and they're willing to pay their investors a dividend. And I'm telling you, we are getting a lot of companies over the last couple of days. I haven't shot a video in the last couple of days because I actually have, but I've been trying to find the best quality videos for you guys to get good resolution because I've used multiple cameras, multiple screen recording features, and no matter what, all the charts look good when I record it, but once I go back and view it, once it's hit YouTube, kind of looks like crap. I don't know if it's YouTube or what, but I've been playing around with a few lately anyway. Long story short, and let's move back on. Zap. Okay, this is one's got a full chart. Well, I don't want to say full. Dropped under the 200-day and down like crazy. 96% in 7 months. Zap Electric Vehicles Group Limited. Probably got a lot of people to jump in that, but ladies and gentlemen, look at that chart. Why would you buy that? Why would you put your hard-earned money into that? You hoping and praying it's going to go back up, and it could. It could rally another 300%. But I can tell you, a lot of people probably thought that over the last 8 months. All right, let's look at the droppers because I'm really getting bored with these. Another biotech company wouldn't be in it. Under the 200-day moving average, so we don't touch anything there. And that's a single biotech company. We don't trade single biotechs. It's one of the rules. But yeah, that's one heck of a loss. 40% in one day. Man, I really hope you weren't in that. If you were, I feel for your losses. Same with this. Look at this chart. The moral of the story is to learn how to read a chart, learn how to manage your money, and we'll get more into that. We get into it a lot on the channel. But look at this. Since it crossed under the 200-day, which, man, it dropped a lot. You would have rode that 200-day when it crossed over up. Anyway, I'm talking too fast. I'm going to get ahead of myself. But that is dropped 90% in 2.5 years. If you would have just, one of the rules I go over in my book, one of the rules I've established over many, many years of trading, if it's under the 200-day moving average, I don't want it. But if it can't hold the 200 for multiple swings, like yeah, it broke there, but then dip right back under. Broke there, dip right back under. Broke that, dip right back under. It can't hold the 200-day moving average for multiple swings. I don't want to hold it in my account, not even the trade, because the odds are it's going to be one of the biggest losers one day. You want to stay out of those. And here's another one. Anyway, that's the U.S. stocks. You can tell by looking at this, it crossed the 200-day down here. I feel like I repeat myself every day anymore. 99% in 2 years. Ladies and gentlemen, why would you want to give 99% of whatever you invested in this away? Right? Get a stock that is bullish. Get a stock you believe in, will do well, and is making money over the next 10 years. And that's why, we only touch the high cap 1000, right? Because those are usually pretty solid stocks. You still got to do your research once they end up bullish. Let's look at this one. All right, biggest winner for the day in the high cap 1000, up 11%. Some people hope to get that just in a year. All right, and now here, we wouldn't be in this. The stock was not bullish at all. Yeah, it swung up over the 200-day. You can tell when it crossed on there. See, over the 200-day, the swings you could have got on that stock. And then, no matter how much you loved it, get out when it drops under the 200-day. Just my opinion, one of my rules, educational purpose. So, crossed over the 200-day, did a couple swings. So, there's nothing really bullish about it, right? The highs ain't getting higher. It's kind of going sideways and down. 200 days just kind of real close to breaking. We wouldn't have been in this one at all. Yeah, it was the day's biggest winner, but don't really care. DHC, Tennant Health Group, would have not have been in this at all. Now here, it broke over the 200-day, tried to swing, I mean, you may have made a trade like right here when it was oversold, but I guarantee there was better opportunities out there at that time. Yeah, I mean, there's nothing really enticing about this chart for me. Now here, it looks like it definitely got real bullish here. And I don't want to zoom. I really can't zoom in and on daily too much, with you guys actually being able to see. But that was a no-go. But hey, if somebody made money on it, tell me why you entered. Tell me what you did. Post it below. Give me some feedback, some comments. It's an exact science. So we don't really deal with healthcare stocks, single healthcare stocks. Unless it's like something like Lilly or something. Well, that was a breakout. Pretty bullish. Would have ran up. Great breakouts many, many times over. But you get more false breakouts than you get real breakouts. Anyway, when it crossed under the 200-day, it would have been time to get out. Yeah, it dropped 10%. At this point, it's only down 10%, but it did pop 10% today. So that would have saved you a little bit. I just don't deal with healthcare stocks. So best bet, I mean, you've been averaging down the whole time. Big thing is manage your account, manage your position. Okay, so these are the kind of swings. Oversold, bam, oversold, bam. Bullish stock trending up. Thought we might find some more of those in the top winners, but we did not. Here's Dolby Laboratories. Nothing looks good about that. We wouldn't have been in that. Wouldn't have been in that. It's too short. Ladies and gentlemen, as I'm saying this, you need to be asking yourself, would you be in this? Are you in this? And why? Right? Are you in the biggest loser for the day? Are you in the biggest winner? Is your strategy pretty consistent, 100% accurate? And are you able to manage those trades? AMT. Now here, we wouldn't have been in this, but we would have been in this swing right here, 17% in 16 days, but we would have locked our profit in right here. We would have entered here, maybe sold here, 10% in 14 days. May have held, probably would not have held for that gap. We probably would have definitely sold in the strength there. So possible 10 to 13% short time frame. Those are the swings we look for. That is that's our favorite type of stuff right there, ladies and gentlemen. And you can go, let's just go midway and pick a chart, any chart. Microsoft. Look at this. Beautiful time to add Microsoft. Oversold. Grab it there. Okay. Probably would have sold when it was overbought. 5% in 14 days. Not huge. But if you're adding this to your long-term investment account, then once it crossed back over the 200-day, got oversold there. That's a buying time right there. That's when I would have added it to my long-term investment account. And then on every pullback, every time it's oversold, and you're up 34% in 7 months. Okay. Microsoft is one of those companies you may want to add for the long term. But if not, I mean, that dip, there's a dip in the stochastics, but really not in the stock chart. So I wouldn't have been in that unless I was in it already from here or one of these other positions. Let's see what else we got. S-Wave. Oh, wouldn't have been in that. Ladies and gentlemen, I don't want to keep you too long, but that is how we trade. Those are the biggest winners and biggest losers of the day. If you were in them, please post below. Real quick, let's look at these are the bullish charts. I want to see any buying opportunities out there. When we buy, it is oversold over the 200-day moving average. And that is what we got on these down here. Now, I personally am waiting for the market to pull back. I don't want to see the entire market in the oversold position. When I say entire, I'm talking about some of the big companies or big ETFs like the Dow Jones. My trading account's waiting for it to get back to the oversold position. Same with Qs, same with SMH, same with the USO. Well, not USO. I don't trade commodities. But SPY. But ladies and gentlemen, we buy when the stochastics is under the two or in the oversold position, and it's over the 200-day moving average. All right. So SMH held it. We went over that prior, so we would have been at SOXL for a 56% gain. Let's do that again. Definitely held right about right there. 40% gain in 11 days, ladies and gentlemen. So those are the swings we look for. If you have any questions, please post them. If not, ladies and gentlemen, have a good day and a great weekend.